Well, let's clarify a few things. Yesterday, I did a video talking about I thought cycle completion was upon us. Let's expand on that a little bit today, and let's really talk about that because I definitely think that the real estate cycle is probably starting to completion. It is a pretty long process, so let's go through it. I don't want to belabor this, but I had so many calls and so many emails about it. Let's just get back and let's just talk about my very first slide. Let's go right to it and get going on. Let's talk about the economy here. So we talked about the fact that we saw the S&P global PMIs are dropping like a rock. They're coming right off their charts, and they're dropping. So they're just barely at expansion. So as you know, when you do the PMI, anything above 50 is expanding. Anything below 50 is contracting. Well, it's had a pretty significant drop. Remember, we were going at a very, very uh, unsustainable level. I mean, we were really going gangbusters, and now we're starting to see the interest rate increases are starting to have their effect. Now, keep in mind, when the Federal Reserve raises interest rates, it takes 6 to 9 months to 12 months for it to really fully be effective. So we really aren't going to feel the effects of these uh, rate increases really until mid next year. So this is just starting, and it's really at just break even, and the trend is certainly down. Here's the next slide. This is what we're concerned about. So take a look at this. So got this morning from Bloomberg and Zero Hedge, and this is industrial utilization. It had been fairly good last month. It actually popped up a little bit, but now it's declining. So month over month, it has declined. It's in line with what we're seeing with the rest of the PMIs. So again, I expect that the industrial utilization probably to slow even further as again we start seeing the Federal Reserve um, increases and take effect. And of course, this is draining the systems of liquidity. You know, if you look at the M2 supply, the M2 is down to almost zero. It was at historic levels. So lots and lots of cash, lots of liquidity has been taken out of the system. And of course, in order to borrow, has become extremely much more expensive. So I'm going to tell you that my forecast is for an extremely difficult time coming in and probably a very severe recession. So let me go to my next slide and let's just talk about what's going on. Now, I'm in the real estate business. I'm an absolute expert in this, and there are times to invest, there's times to be aggressive, and there's times to be cautious. We're in one of those times that you really want to be fairly cautious as to what you're doing. Now, again, this just came in 2 weeks ago. We're looking at pending home sales down another 10%. And we haven't been this bad really since 2010 and 2009. So worse than the coming off the great financial recession. So, and again, we are just now starting to feel some of the effects of the rate increases. We're not going to see these till probably January, February, March, and most of them in June. So they're coming. And this does not bode well for the real estate industry whatsoever. Look at this. We're just down negative on the index. And of course, this was the COVID. So even when we had COVID and shut the entire country down, we didn't really go hardly anywhere. We popped up to unsustainable levels. We've always said that. But now it's down to the point where it's really, really terrible if you're a builder. So look at this. So we are seeing home buyer and home builder confidence is dropping to all-time negative records. Never been this bad before, which leads us to say, look at if you're a builder and you've built tens of thousands of homes for buyers that were going to be buying these homes. They were all built for someone. They didn't go out and spec these properties, and their buyer qualified at 3.5%. And now we're talking 6 to 7%. So the interest rate has doubled on them. A lot of these people are going to fall out. A lot of people aren't going to be able to afford it. So the builder is going to be stuck with lots and lots of specs. They don't like that. And the home buying environment has just become awful. So there's very, very few people coming into the tracks of new homes, and there's no buyers. So not only do have they built lots and lots of homes for buyers that probably aren't going to close on them, they haven't got any new buyers to replace them. And the home buyer confidence has had 11 straight months of decline. Thank you very, very much, Jerry. This worked exactly as you thought. So let's go on to my next slide here. Now, this is the meat and potatoes of it. I'm going to tell you, when I talked to Dr. Nenner was telling me that he thought that the Phoenix, or actually the whole national real estate market, had finished and was going to go into completion. I was surprised. This was in our first one of our interviews in spring of this year, and he said, no, I was, because I thought we still had another year or so to go. But what I didn't realize was this completion process is a really, really long completion process. So I'm going to say we probably peaked here in March of 2022, which is going to correlate with Q4 of 2005. Same peaking process. And that process went up to the final peak in 2000, late 2006. We haven't gotten there yet. We're in this journey now, so we're probably somewhere along here, but we're in the topping process. No ifs, ands, or buts about it. We're in the topping process. We probably will get slightly higher prices, but no volume. So the volume of home sales is going to drop significantly, and then it's going to start the decline. And the decline doesn't waterfall for another 2 years. So I'm thinking this is probably March 2024 before we start seeing any evidence of a real major problem. So you have a couple of years of probably general public isn't going to understand this, but us in the industry, we've seen this before. I think this is a topping process. So I'm going to guess that become spring of 2024, we're going to have a waterfall event, and I think this is where there's no buyers in the marketplace. There's no bid for the properties, and prices really head south pretty radically. So I think then you can see this come down, and I see a severe correction in the housing market, but I don't see a collapse. I don't think we're going to see what we saw in the great financial crisis of 2009, 2010, where we had just lots and lots of underwater people. I don't see that happening. I could be wrong, but at this juncture, I don't see it. But I do see a very difficult time for the marketplace. So if you're in a business, you just need to be aware of this cycle. So if you're doing any flipping, you may better make sure that your numbers work really well. And this gives us a great opportunity when we get here. So that great opportunity is literally 18 to 24 months away from here. So let me go to my very next slide, and let's just talk about that. And this is the real estate cycle, and we're putting this together. I do believe that we are right here, just as we talked about before. We probably have no more than 12 to 18 months, and then we have our correction. This shows a pretty severe correction. I don't know that it's going to be quite as severe as that, but it's going to be terrific. When you get down to here, when we've bottomed, this is going to be one heck of a time. Fortunes literally will be made. This is long-term generational money that only comes along every once in a while, a couple of times in your lifetime, and it's coming. It's coming here in 24 months, so you're going to have a great opportunity to do this. And this is kind of a stylized. We talked about this one yesterday. I think that this kind of shows us. So here, this is probably March of 2022 in our real estate business. This is really set up for a stock and bond market, just in an equities, but valuations work as well. So this is probably March of 2022. We have had a correction of 15 or so percent. We're probably going to recover a little bit of that. And then as we go into really go into 2024, we complete through 2023. I'm going to guess that we really start seeing a slowdown in June of 2023. It won't become evident until we come around here and we get into 2024. And then I think we have a waterfall event where there's just no bid. I think all the buyers are out of the market. I think the business is really terrible. I think people have trouble time qualifying, and no bid, no price on the house. Home prices will correct fairly severely. So demand destruction is certainly coming. We have significant pain coming in the marketplace. So what does this mean for you? What does this mean for you? It means that you have a terrific opportunity. It's nothing to be afraid of. You just need to be aware of this. So if you have been over leveraged, you've been out there spending more money than you really should have, stop doing that. Start saving some money, start putting some money into reserves, and in 18 to 24 months, you can make generational uh, buys that are going to last you a lifetime. It's coming, and once we get to the bottom of the cycle, you can really start accumulating with really with impunity, because the next direction is obviously up for us many years, 10, 15 years. So this is what we're looking for. We want you to be very careful. Now, I'm not saying you need to sell your rental portfolio. If they're in very good shape, I think rents are going to be probably a very good market to be in, because people are going to need a place to live. And I don't see a huge decrease in rents. I think people are going to be struggling, but I think they will pay their rent. Maybe they'll back up a little bit, but I don't see a collapse in the rental market. So, but if you bought a house and has a $5,000 mortgage on it, and you're thinking that because it's got a $5,000 mortgage, I'm going to rent it for 5 grand or 6 grand, I think you better rethink your figures, because it's going to rent what the market is going to give it to you. You're not going to be able to command to the market is going to command to you. So you're going to get what the market will give you, and you need to make sure of your numbers. Now, we have a buy protocol. We're very confident with what we do, and I'm not afraid of the marketplace. I think we as investors, if we see a good opportunity, we should go ahead and seize it. But just keep in mind that this is a long-term horizon for us. We're looking 5, 10, 15, generally 20 years out when we're looking for a retirement. For myself, I could live to 100, so that's another a little bit of time. So I want to make sure I've got income coming in for myself. However, if you're a flipper, there'll be no wind at your back. The market is not going to be going up. It may very well be declining. So if you think you can buy it for 50 and sell it for 100, you might be buying it at 50 and selling it for 75 or 80. So you just want to make sure that your numbers are good. Let me go to my very next slide. I think we're about ready to finish this. And I will make myself, if you like my videos, it really helps if you subscribe, and if you like our videos. For some reason, YouTube really makes a big deal to them if you have subscribers. So I think a huge opportunity is coming. I think you need to protect your credit, protect your income, and build those reserves. Don't go crazy spending money. If you've had a very good business, make sure you start putting cash aside. Put some cash at home, of course. And you have an opportunity that only comes along 2 or 3 times in your lifetime. It's coming right at you. We're going to have it in 12 to 18, 24 months. That goes by very fast. If I can help in any way, I'm certainly available. My team is available. We have done this for a long time, for generations, very successfully. I will be talking to Dr. Nenner probably in a week or so, and we're going to discuss this. If you need me, you can reach me at michaeldouville0@gmail.com, or you can call me at West USA, who holds our licenses. They keep us in compliance. They do all our paperwork. You can reach us at 602-942-4200 if you want to talk with me. My very best with you. If we can help in any way, my best. Bye-bye.